My last Bitcoin video, which was made during my last stream, I went over 3 fractals, and the headline or the thumbnail was, "This bounce could be bigger than you're expecting," right? And I gave you the top 4 ways. These are only 3 here. I gave you the top 4 ways in general that price interacts with my magic origin lines, which seem to be relatively, for my channel size, catching fire, because I made a video with price candles, I think 2 days candles bouncing on them, and ever since then I'm getting a lot of questions about it, because obviously it showed that these work very magically, right? They're a big deal. It's not that other people are trading off of this and looking at it. It just, I don't know, it represents what algorithms and math psychology are doing. I don't know why they work, but they work, and they set specific rules on Bitcoin. Specific rules. It's if this, then you only have 3 options, right? And then you could look back in time and decide, hey, well, since the first part of that if was a little bit down, then I think it's more likely that out of the 3, it's probably going to be this one. So we just deduced probabilities, all because of how this buyback over here, it bounced strongly off of this origin line, and we'll zoom in to show all of my rationale behind that. I will stay on the daily candle, yeah. So the first day that this all dropped, see that wick? I said, because of this wick, and it closed up here, the most likely, how did I phrase it? The most likely fractal, or the most likely outcome, is Bitcoin will not continue accelerating to the downside. Specifically, not accelerating to the downside, right? I didn't say it wouldn't go lower, but it would not accelerate. Acceleration implies you hit the next origin line down. It did not. It did not accelerate down. It made less aggressive. It started going down more slowly and more slowly. The most accelerated move was here. Then everything else was just a weak lower low, right? However, during this time, if you look at it, on small candles, it looked like I was going to be flat wrong. It really did. And honestly, I kind of thought it was going to be too. I still could be. But it's unlikely. So that, and when I say wrong, that just means one of my top 2 most probable choices don't play out. Okay. So my top thing was, because of this wick, it's not going to accelerate down, which is one of the 4 just things in general that happens at origin lines. It happens a lot, but you can tell as it's happening. It just doesn't bounce there, it keeps going down, and we didn't see that happen. Therefore, it's not even an option. But then after this happened, I was like, oh shit, is it gonna do something different? And I was like, it kind of looked like it, but it didn't. It did not accelerate. See, this was the big move. Accelerate. Slower move, moderate move, small move, higher low. Did not accelerate down. Okay? And I bet I have some people on here, or people watching this, not on the stream, the recorded portion, who saw that video and during this time was like, he's wrong. He's wrong, right? Well, it looked like it, but not so much. What we're going to do in this video is the micro timeframes, or I would say small and midterm timeframes. Small timeframes are going to dominate everything right now. It will, because it's all about, I promise you, it's all about how price interacts with this. This is going to be, by far, it's going to be a better signaler than any indicator you could ever dream of, anything, until price separates from this line. These lines are more macro than anything that you can imagine, because it goes to the origin of price, origin lines. There's nothing more macro, right? Super Troopers, sir, could you pull over? I'm already pulled over. I can't pull over any farther, right? You can't get any more macro. It's already too macro. So what we're going to do here is we're going to figure out of the 4, the only 4 ways that price can move at these lines, one's already out, which I predicted it was out there anyway, even though it looked like it was going to pop back in, but it's not. So it's out. It's out for the count. It's not an option because it did not continue accelerating in the first 2 days. We're going to figure out in this video, do I still have the same order of most likely, second most likely, third most likely? Or should I adjust them? Or are we in that awkward window where each of them has about equal probability of playing out? And before I start this video, I'll let you know, I actually don't know. I just know I just know that it looked like I was going to be wrong, that the fourth most likely one was going to happen, which would mean I'm wrong. But then it popped back in, popped back up as expected. So let's go into this, and you're going to watch me try to deduce, just from a logical standpoint, deduce things out of the way until I'm left with enough clean slate so I can clearly determine what are the probabilities of each of these fractals, which I do have prepared, and which is the most likely. Is there anything more likely, and what can we do about it? Are you ready? Let's get it. I am going to go to the 4-hour chart, I think. Yes. Okay. As we get into this part with the origin lines, just realize that fractals are for guidance. What's a good analogy? I can usually think of analogies without even thinking. They just pop into my head. I can't think of one right now. It's similar to if you know somebody's going to hand you an object and your only clue is that it's rectangular in shape. It could be a big and skinny box without much depth, right? I guess that's a 3-dimensional. No, let's keep things 2-dimensional. They're gonna hand you a rectangular object regardless of the 3rd dimension depth, okay? So let's think in 2 dimensions. Even though one rectangle could be as big as your house, right? But the idea is the person's gonna hand you an object that's rectangular, so it can't be that big, even though that would still be a rectangle. So you know within reason, okay, it's a rectangle, it will be a rectangle, but I don't know exactly what size, but I do know that it will be a rectangle. Does that make sense? That's what these are for. It's not going to mean that's exactly how price is going to move. You just know, here's a rectangle, here's a triangle, here's a square. Doesn't mean they'll have to be the same size, but I know roughly what I'm looking out for, okay? That's how to use these. That was an okay analogy. I'm usually better at thinking of analogies really quickly. All right, so I think in my last video, I used a different fractal to show you that this could be a larger bounce than what you're expecting, right? All because of the first buyback off the origin line, but it's still the same idea because the rectangle stuff. So if anybody is like an eagle eye person, hey, that's not the same one on top. Well, the orange one and the blue one, they're different colors now, I think, but they are the same. And then I found a different one here. Okay, so take a look at this. In each case, all of these, or let's say, here, let's go like this. Anytime that you have a strong buyback, can you even see this? Right here. Anytime that you have a strong buyback like this off of the origin line, I'm on the 5-minute chart. Instantly, you know that you can, out of the 4 options, get rid of the one that goes straight down, okay? How it behaves on its next attempt to touch this will help you determine, with the 3 that are left, what are the probabilities. So because it came all the way back down, I think that my first guess, I might have to move it to number 2 because of this. So let me throw on the green fractal, which was the which represents what was previously my first guess, my number one most likely scenario. I thought it was going to do something like this. And you can see at the end, you got that last wick up to get all the late shorters, recent shorters out, high leverage before you went down, right? But you can also see here, let me make this is too dark. There we go. You can also see, let's take off price. Boom. You can also see it wicked below strong buyback. So that's where that one is. And look at price. 3% difference, that's okay. But it wicked below and immediately found support on top. And did not go below again for days and days and days, right? Let's measure that out. 12 days. We did not get that this time. Here, it broke, so 4-hour candles, it started breaking down below here. Therefore, even though this is still a strong contender, something, just a general rectangle, doesn't have to be exactly this, to the candle to candle, but in general, a strong buyback, the move goes higher than you think when you're expecting capitulation. It could go to 21K again, is what I'm saying. And that is why I made that thumbnail, my last thumbnail, the way I did. That was not for clickbait, even though it probably served as clickbait, but it was statistically likely. And I know everybody's out there trying to make money off shorts, or a lot of people are, right? Or at least that day. And that was my way of trying to give a compelling reasoning. No, you're gonna get a bounce here. You're likely to get a strong bounce, okay? Since then, it's behaved a little differently. I'm gonna put this one at number 2 for now, I think, but still, it's the second most likely scenario to happen. Something that smells like this. It's not the same thing, but it smells the same, right? Like a husband and a dog smell pretty similar, right? Okay. Price back on. Now, here, this fractal is pretty similar. So here, it did come back down below rather immediately. Boom, buyback. Next day, boom, went below again. And how did that one behave on the origin line? So this one is essentially your shade of gray between blue and green. Maybe this one should be red. It hovers and it essentially is saddling. Like this is a horse, right? So all we're doing right now is we are concentrating on how price behaves at the origin lines, especially during large moves, which could be the end. Or it could mean it's gonna hit the next one down, which is what I still think. But, oh no, I forgot one. There are 5 ways. The 5th way is that's the bottom. So I took away 2. Oh, no, I didn't take away that one. I think I had that one as my 3rd most likely scenario at that time. I think the bottom was the 3rd most likely. But there are 5 total. Let's just remove 2, okay? Technically could have been the bottom, but I'm getting ready to show you why that's not gonna happen. Very likely not gonna happen. Okay. So this is a horse. It's saddling it like a horse rider, both sides. But still, if you're trying to short after this big wick down, which is what we just got, you're getting smashed. That's 20% higher. And look at the price on this guy or gal. Not only does it hit 19K, it hits it again before then coming down and not giving you a second chance to short the, this one was hard to play. It didn't give you a second chance to short a rejection of the origin line. This one would have been really tough to play. I would have missed out. Like right here, I would have expected one more wick up, which is totally more normal than anything. So let's hope this doesn't happen, because this would be a lot harder to play. Unless you shorted the breakdown of the punch low here at, yeah, so right here, exactly, accelerate at that candle. You would have a second chance there, but not up higher. This one might, something to this effect might be the most likely at this point. Still 19K. Remember those numbers. 19. Just remember 19K and how this fractal worked. The next one, and the last one we're going to look at, is one that gets, where is it? You also get a strong buyback, but the strong buyback did not get price. So it is a little different though. On all of these that have happened in Bitcoin, and again, this is not just at bottom. So this, you know, there are lots of origin lines. So this type of, there are lots of samples. There's a big sample size of this. In this red fractal, the key thing to keep in mind is where the wick, the original wick and buyback were, it's not at the origin line. It happened later and then recovered. The original, like the very first strong buyback. But our first buyback was at the origin line almost to the dollar, because origin lines are fucking badass, right? I get one F word a week on this channel. So for anybody who might be newer to my show, have kids around, I don't say it very often. Hell, I just, during my stream, I had like 3 kids in my room, in my office. No way. All right. Therefore, to get, so this one I call trapped under, tank later, right? That's a great name, right? Or just, you get trapped under. I don't think this is the most likely because of the what I just said. The original buyback was lower. It did not happen at the origin line. So I'm going to keep this one, or put this one at number 3 for now. Does that make, does all my logic on why make sense? All right. Let me make sure y'all aren't saying you can't hear me or something. Okay, good. All right, we're all good there. Maybe I'll turn down the volume. There we go. All right, so now let's take a look one more time, now that we've got the logic out of the way. Actually, yeah, this one did get bought back at that. Yes, it did. Okay, so here, the original buyback is at the origin line. Yeah, this, I was gonna say, I thought it went higher than 21K. Yes, it did, yeah. This went to 22. But now that we went back below, I don't think 22 is likely anymore, because it did not bounce hard off this to then days and days later, then make your second pass at the origin line 16 days later. Therefore, 22K is not likely. Whatever bounce we're gonna get, it's gonna be extraordinarily likely that it's significantly less than that. But just remember, it's possible, okay? Third most likely? Maybe this is the third most likely. I might have a tie for second. Yeah, I'm gonna make the, you know what? I'm gonna make the orange one my favorite. Something that smells like this. I think the horse rider is gonna be my favorite option. I think I'm gonna backtrack on this. I don't think 22K is my favorite option. Yeah, so I'm gonna put this at number 3. I'm moving my previous number 1 because of this wick, right? Let me zoom in. The first wick that hit right here, at that exact moment, I was correct to say the following. It's statistically more likely to follow this fractal at this exact moment. Probabilities are fluid. I'm not trying to talk about gender. I'm not going with that. But they're fluid. So the probabilities have now changed. I'm going to put that at number 3. Yep, this is number 3 now. Okay, but it is still a top 3 most likely. So 22K could happen, but I don't know. It's the third most likely. Here, since the original buyback, yeah, I do have an order now. This is number 2. The reason why this one's number 2 is because the original buyback was below the origin line. Therefore, and even in this case, you know, you can still get moves up to almost 19K, right? But in general, you use this as pure resistance. Pure resistance. And this one, the green one, is pure support until you break down. So you have pure resistance, pure support. So support, 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 and then you break down. Blah, right? Pure resistance, pure support, and then the mama bear porridge somewhere in the middle. And because the original wick, this guy right here, this buyback, was so aggressive right at it, and then it went down, which is kind of weird, then I'm going to guess the weird one is the one that's going to play out. But still, in that case, you're going to hit let's see here. How did I have this? Right. How did it go? It went like... It's like this. So that would still be 19 and change. Okay? Now, let's dive in on the smaller time frames. Now that we have those out of the way, I'm going to go to the 15-minute time frame, what I've been running on my live chart all day. Which, by the way, I typically only do that on the weekends, Friday night through Sunday night, for free YouTube, public. I'm doing it now because we've been waiting 145 days for something to happen. So I'm just going to give it to everybody for a week or, you know, days or whatever. Don't quote me, but just for a little bit. So if you have been somebody who's been enjoying that chart in the future, to have it Monday through Friday, you will need to join the Cryptillion YouTube tier or any Discord tier to have that Monday through Friday when I make it available. Does that sound good? But right now it's free on the you don't need to do anything. I'll keep it on there for a while. All right. And speaking of all that, the links to the Discord community are in the description sections of all my non-stream, non-live videos. And then Twitter, you really should be following me on Twitter. I'm posting some stuff that is that literally nobody else has really charted, such as I think the stock market will go sideways for an entire decade. It will not make an aggressive higher high for over 10 years or longer, for example, and I show you why on Twitter. And then should I hit this joint? No, it says should I hit join? That's the YouTube tiers. On my non-streamed videos, it might be below here, but on just my normal videos, it's right next to the subscribe button. If you hit join, then your money is instantly taken for the month. So just hit it. No, when you hit join, a video pops up describing with skeletons and pirates what it includes and how it's different than Discord. Okay, so let's get back to business. I'm going to throw on my live chart now that I've been streaming today, and I will continue to after all this is said and done tonight. So when will that stream? It'll be a new stream link. It'll be up around, 9 p.m. or something, New York time. No, that's this. I don't want to show you all that. That's too much goods. We essentially identified where Bitcoin's top will likely be next run. But anyway, okay. So remember what I was saying? Remember that number? Oh, wrong way. What's over here? Both of these are on, or these lines are on both sides of the number I told you to remember from those fractals, right? But I'm coming to these lines from a micro time frame standpoint, but they align with midterm stuff. So in order to better determine which one will play out, it's all about the small term time frames. I cannot stress this enough. Like, you don't always want to focus on the small term, but in moments where just drastically different things could happen, different scenarios, and you identify what they are, you have to pinpoint the thresholds on when your probabilities change on which one's going to play out, right? Therefore, that requires the small time frames. And when the small time frames align with those same thresholds, then you're perfect. all you need to look at are the small time frames because you already identified what can happen on the midterm and larger time frames. So therefore, your thresholds are set. Zoom in, even on the 1 minute chart. Screw it, right? That's what we're doing. Am I making sense? Like, I really hope that I'm making sense. Okay, so the micro term time frames are as follows. Whenever you have okay, so this blue line's the origin line, right? All right. Whenever you get a W shape looking, which is honestly by far the most common way to do bottoms, right? So the way that drops usually have, or they usually entail, or man, if I could speak English, how they usually happen, how they go down. It usually goes down. Yeah, that's a good way. This is how shit goes down. You typically have the reason why W's happen, actually here, I'm going to blow your mind. This is this is applicable to Solana and FTT. Even though Solana is probably going to make it. But anyway, for anything, the price of anything, the price of Apple, Amazon, doesn't matter, right? But I think it happens a little bit more in crypto. But for any crypto, what I'm about to say is good. Like, listen. The reason why W's happen quite a bit is because Bitcoin moves down in waves of 3. And then on that third wave, you then get your higher low. And it forms a W, or an inverse head and shoulders. But it's because Bitcoin moves in waves of 3, right? As more and more buyers start defending stuff. 1, 2, 3, higher low. It just makes W's. That's how shit goes down. Okay? Is it always waves of 3? No. But among all the ways price moves down, it's by far the most likely. Is it over 50% likely for any drop? I don't even know if I would go that far. But maybe it's like 40% likely, and no other one general way is more than 40%. Does that make sense? So the most common, but not probable in and of itself. There's a difference. All right. Now, when that stuff happens, because it happens a ton, you look left. Yeah, for you think of two things. After you realize it's waves of 3, that's what forms the inverse head and shoulders. The second thought process is you look left to set your horizontals. I usually look for the second and third local high looking left. That's where it always goes. Almost every time. Now that rule is way over 40%. And that could happen on 1 minute time frame, right? Like within a small daily candle, right? And on this chart, it's happening on the 15, maybe, between the, small time frames up to, that's sort of even up to the hour, roughly. It starts breaking down at the hour, right? So I'm on the 15-minute time frame. But this can happen on any time frame. All right. So you look left and you count, you go to the second and third most recent local highs. So from the bottom, look left, that's 1. I'm going to mix these together for number 2. If this is too close, this is number 2. This is number 3. Horizontal here. And so since these are pretty close too, you might make a box for each. So for example, since this high and this high are kind of close, I would make a box starting from here, ending there, and drag it sideways like this. Okay? And then here, I would make a box from here to here, since I'm I'm counting this as one local high. All from there to there. And I'm telling you, this is where it's almost every single time. When you see this shape, you literally look back 2 local highs, and that's your target every single time. All right. And that could be from where it blasts off, and sometimes that's from where it breaks down. And other times, that's where it starts fucking going sideways and not doing anything for 100 days. But it's an area of interest, and from the lows, that's where it's going. After you get this higher low established, right? Okay. The third thing to think of, so there are 3 things to think of, and then I'll tie this back to the micro time frames dominating what's going to happen next. Because we already know what's happening on the larger time frames, or what our options are. The third thing to think about is, let's see here, how should I say this? I don't know if there's one way to say this. How your mindset should be from a time axis. What timing should I expect? So you know, if you've clicked around with your money and done futures trading or even spot trading, you sometimes find yourself waiting for freaking ever for something to do what you had planned to do. And then right when you bail out, or like you just give up because you go chase something else, then it goes. Like, you know, you've been there, especially during a bull market, right? You're waiting for like, oh, this one's got to go up. And I've been holding on this for 2 months. And then right when you go sell it for something else, then it takes off. Like, oh gosh, you know what I'm talking about. But in that line of thinking, the missing element that got a person trapped in that situation is because you did not appropriately format. Is that the right word? You did not appropriate format your brain to the time axis, your expectations on when this will happen. And on these patterns, it's so simple. Look. Okay, so price action is beautiful, right? As we all know, like that's why we're here, because we're only here because looking at price is beautiful, right? And symmetry is beautiful. I'm just saying it like this so you remember it. So the timing on when we can expect something to happen is actually kind of soon. Around tonight's closure. So shit might start moving tonight. And it could go either way because it's flirting with this line. So these shapes often break down. And in a bear market, it might be more than 50%. In a bull market, it's not. After you establish higher lows and higher highs, in a bull market, it's like 70, 80% chance to go up. That's why longing higher lows in a bull market is just the way to go. Especially if you see the shape. And now you understand the timing on when. So bulls and bears are going to try to finalize what's going to happen between tonight and tomorrow. Price will resolve itself with a very high likelihood between tonight and, let's say, by U.S. traditional markets closure, which is around, it's about 4:20 p.m. New York time. So around 8:30 London, 9:30 Berlin. That's about the latest that this will have to make up its mind because of the symmetry. It's just the way it plays out. Could it keep going sideways? Maybe, but it's going to do something different. And so now that we know when to expect this, how can we tell which way it's going to go? Because right now, can't really tell. If I had to guess, I would guess up, at least to hit this box. But around that time, if you go to the micro time frames and you've done this origin line, it's simple. If it has not gone below this, then it's more likely to go up. If you say to yourself, hey, it hasn't gone below, and the symmetry has been met, therefore it's more likely to go up. Yeah, you're right. But the probabilities are fluid. Once you go back below, it's instantly more probable that it's going to go down. Even though just 10 seconds ago, it was more probable it was going to go up. Does that make sense? Probabilities can flip in an instant when you have identified where they flip. This is the line. It's your 50-50 line. So your probabilities can flip 20 times in, let's say 4 hours. It's probably not that many times, like 3 or 4 times, because price on the 5-minute candles could go like this, and it might leave you like in suspense forever. Like, it's more probable to go down. Now it's more probable to go up, right? Maybe switch your positions, this and like, what is it? I'm just paying fees. Like Cosasverdes is screwing me up, right? But that is possible. And this is the only thing you need. Above it, more likely to go up. Below it, more likely to go down. However, when your probabilities flood your direction is when, it looks similar, but it's on opposite sides. So that is just when you become more likely. That means 51% or more, right? But when your probabilities flood more heavily in your favor, as in it's a tradable edge. So 51%, I guess it's technically a tradable edge with the correct risk management. It'd take a lot to calculate. Like, you'd have to really, really buckle down your risk management trading like that. But it's nicer to trade with better probabilities. So when do those probabilities flood? Well, easily. Look at that wick. When price goes below that wick, you have a very tradable edge to the downside. That's it. That's way better than 51% chance. When do your probabilities flood to the upside? Easy. Same type of idea. When you get back above 17,950. Because that's when it's going to bust up. Because sellers will stop defending this line. And a lot of those sellers will become buyers. And it'll instantly, it might skyrocket it might go straight to 18.7. And that's it. If I can add and make an honorable mention to the psychology of this, bottom shape, not a macro bottom shape, but just micro bottoms and all that stuff, right? Tradable bottoms. It didn't apply very well in this case on Bitcoin, but a lot of times you have an even better probability of guessing, or a better chance, better probabilities with your guesses on where it's going to go, because a wick, for example, like from this part of the move, I don't know if you can see these candles very well here. Let me get a 15-minute candles. They're a little wider. Can you see this okay? So a lot of times this move down is a little bit more aggressive, and it wicks like this, then comes up and does everything the same, right? But the wick is exactly what makes sellers step in here to form that. So you'll usually see a wick to this side exactly at the second and sometimes there's on both of them. Sometimes you have 2 wicks down farther left before the W was really taking shape, right? Because it was moving sideways here. It hadn't had an aggressive move. Usually it's waves of 3. The aggressive one's the first wave, like by default. That's when it starts. But it doesn't mean you can't get a wick. And honestly, it's a lot of them. You'll see a wick both at the third local high to the left and the second local high to the left. This one's bare naked. You don't have either. It's kind of weird, but they usually align. So if you're gonna try to remember what I'm saying here, I gave you 3 things to think about. It applies to the price of anything, including oil and black market testicles. So this is a good one to remember, okay? Bull markets, bear markets, dead coins, Bitcoin, whatever, butt coin, titty coin, everything. And just realize this example did not have wicks, and they typically are more prominent, and they align with the second and third, with the first concept I mentioned, or no, the second concept I mentioned, which was second and third higher local highs to the left. And did I tie this back to the fractals? Oh yeah. So now, okay, I didn't actually. Okay, so now that we know how to view things on all time frames and on the time axis, right? Up and down, sideways, and the fourth dimension, which is time. Now we know that this very line, looking at it on the micro time frames, now I got to go to the 4-hour chart, is going to give us a better idea at any snapshot in time which one of these is going to happen, because how it interacts with that origin line, because it's your 50-50 line. And for newer people, my origin lines are slanted up. They are ascending lines, so it's not a horizontal. So just because you saw a price point at one area, 2 days later, it's like $10 higher or something. Let's see. Let's do 5 every 7 days. How much does it increase? Rise over run. $300 a week. That's the slope. Right? And now I think in this video, in my previous videos where I keep saying, hey, low time frames are going to dominate, I think I finally explained it and allowed us all to visualize it better. Because no matter where price is on that origin line, I keep pointing the wrong way. No matter where, I'm usually on the other side. Yeah, there we go. No matter where price is on that origin line, at that exact moment, if it's above at that snapshot, it's more probable to to go up. So therefore, orange might be more likely. Or actually, green is still kind of a contender as well. So if it's above the origin line, then maybe at those moments, the number 2 most likely is the bigger move up, closer to 21K. But when it goes below, this is the third most likely. You can forget about it. Actually, when in snapshot of time, if it's above, then these are the top contenders. And when it's below, these are the top contenders at any snapshot in time. And the top contenders, because price is next to the origin line, the probabilities can flip literally 4 times in a day. Okay? And until you get the resolution from that wick low, or that, what was the level I gave you? 18.7 something from that local high, right? Said the blue box, once it goes above, that's when your probabilities flood. So between those 2 points, your probabilities are fluid. But once you break those 2 points, then it's extremely tradable in that direction. And that is how to interpret price. Make sense? All right, let's move on to Ethereum.